Okay, here we are again. P2-30A, and I'll go through this with you. Carrie Shaw started her practice as a design consultant on September 1st, 2015. During the first month of operations, the business completed the following transactions. So they give you a list of transactions here, right? But the neat thing about this problem is, you see how they list these transactions here? They're also listing them at the front of each journal form here, right? So you don't really have to have this open. You could have it open if you wanted to, but
they tell you the first.
yeah, they're telling you that here. Okay, so I'm going to work right off of what they're telling me before each entry form here. So she received cash and issued common stock to Shaw. Okay, so this company will have a debit to cash, 40,000, and then they'll issue common stock, 40,000. Okay. Now, we purchased office supplies of 400 and furniture of 1,200 on account, right? So you're going to have two new assets. One is going to be office supplies, and one is going to be furniture. They're both going to get debited. So that's 400 increase to office supplies and 1,200 increase to furniture, both assets, so they get debited. And then when it says on account, that means that they didn't pay for it. Yeah, the company didn't pay for it right away. It's accounts payable. This is an example of a compound entry. We can add those two debits and turn it into one credit, so 1,600. You see? No? Now on the 6th, we perform services for a law firm and receive 1,500 in cash. Well, when you hear the word receive cash, you know the cash account is increasing, so that will be a debit to cash, 1,500. And then this company is a service business. It says that they're a design consultant business. Okay, so they perform these design consulting services, and they have service revenue. Okay, because they perform the services, they earn the revenue. Yeah, they delivered the service, so they get to record revenue. Whether they collect cash or not, they have earned revenue. Okay. Now, on September 7th, paid 23,000 cash to acquire land to be used in operations. Now we have $23,000 more worth of land. So the asset called land is going to increase by 23,000, and the asset cash is going to decrease because that's cash leaving the company. They spent the cash to buy the land. So it's very, very logical the way this thing works. It's really a black and white thing. Yeah. Okay, now we perform services for a hotel and received its promise to pay the 900 within a week. Okay, so I'm going to do the credit first. Because we perform the services, service revenue increases, okay, by 900. Now, this promise to pay, that means that they didn't pay, right? If somebody promises you to pay, that means they did not pay, but they still owe your company. The amounts that are owed to your company are called accounts receivable, right? For the services you perform. Accounts receivable are the amounts that you haven't collected yet for, in this case, for the services that this company has performed. Okay? Now it says paid for the furniture purchased on September 4th on account, right? We gotta kind of scroll back up and look at how much furniture we acquired on account. So on September 4th, we purchased $1,200 worth of furniture using accounts payable, not paying it. So we're paying that off. We're going to pay off 1,200. When we pay cash out, cash decreases with this credit, and that accounts payable is going to go away. Not all of it, just $1,200 worth of it. We're just paying for the furniture. We're not paying for the office supplies amount that we still owe. Okay? So we'll say check answer. Well done. Paid the assistant's semi-monthly salary, $1,500. That's a salary expense. Expenses increase with debit, so I'm going to debit salaries expense, $1,500. And the word in here, that verb, right? Paid, past tense of pay. Whenever you see paid, pay, right? Paid or pay, that means that we use cash, right? And it could be a check, right? When we credit the cash account, if we had written a check, that's the equivalent of using cash. So we would have credited the cash account. Okay. So whether it's cash out of the pocket or if we're using a check, and more often than not, it's probably going to be a check. Yeah. Companies don't really pay their big bills with cash in the mail, right? Okay. Receive cash on account. Okay. When you receive cash, cash gets debited because cash is increasing, right? Cash is an asset, increases with a debit. And on account means that,
kind of like a loan.
well, that means that some customer, we don't know which one, well, it's probably that one that we sold to up here, made a $600 payment. So if you look up here, September 10th, it's most likely this customer that's paying $600 worth of their $900 bill, $900 amount that they owe. So that accounts receivable is going to decrease. We have to credit accounts receivable because accounts receivable is what? An asset, and assets decrease with credits, right? All right. Oh, you're printing it.
Yeah.
Easier to read, yeah? Okay. We prepared a design on September 20th, prepared a design for a school on account. Okay, so this is a design firm. If they do work, they've earned revenue. Okay, so if they prepared this sign for the school, they earn revenue from this school. It's just that they haven't collected it because that descriptive phrase there, on account, means that the customer didn't pay us yet. So we're going to have another accounts receivable from that customer, from the school, and we're going to debit accounts receivable to show that increase to accounts receivable. Okay? So far, so good. Okay? We received $2,500 cash for design services to be performed in October. So this is the opposite, right? We're getting cash, but we haven't done the work yet, or this company hasn't done the work yet. So you see the word received, you can split that out and do that separately. Think about receiving. Okay, we receive cash, cash has to increase, we'll debit cash. Forget about that, you've taken care of the cash. Now, because the work has not been performed yet, our company has an obligation, and the obligation is to perform the work, right? It's not to pay money back, it's to perform the work. So we cannot call it revenue, we have to call it a liability, and that liability is unearned service revenue. That account is a liability to show that we owe $2,500 worth of design work. Okay. Now, it could be relieved by paying the cash back, but think about it. If you agree to do something and you don't do it, it's probably not going to just cost you $2,500 to get out of this. There'll probably be some legal problem going on, right? Breach of contract kind of thing. So it's not a straight dollar amount you owe. You owe the work. Okay. All right. We received $2,900 cash for consulting with Plummer and Gordon. So this sounds like a situation where the job was done and the cash was paid right then and there when we completed the work. So we can call that one service revenue. We'll book it straight to service revenue and debit cash. Okay. we paid $1,800 cash for a 12-month insurance policy starting October 1st. So this is September 29th. We're paying for something that we're going to benefit from in the future. We're not benefiting from it right now, so we're not going to call it an expense. We're going to put it into an asset called prepaid insurance. So this insurance policy doesn't start till October 1st, but we paid for it up front. Okay? So we got 1,800 sitting there in this asset called prepaid insurance. Now as time goes by, as the coverage period goes by, we're going to move it out of prepaid insurance and turn it into insurance expense. But because we really haven't received the benefit from it yet, it's not an expense. When we start to benefit from this cost, then it becomes an expense, right? In the meantime, we have to put the cost of the policy into an asset, and that's called prepaid insurance, okay? That's why we're debiting prepaid insurance. Okay. Again, this is exact same thing. I think the number might be a little different, but we paid the office assistant salary at mid-month up here on the 15th. Same amount. So it's going to be the same entry as on the 15th. 1,500, debit salary expense and credit cash. Okay, paid monthly rent expenses. So that one is pretty similar to doing the salary expense. We're paying the rent on the date. We'll call it rent expense. Straight to rent expense. Okay. Now the company received a bill for utilities, $550. The bill will be paid next month, but this is a utility bill for September. Notice we're at the end of September, September 30th. So we're going to book this as an expense. We're going to put it into utilities expense, $550, and if you read it right, it says we received the bill. It doesn't say we paid the bill. We just received the bill. So you can derive that this hasn't been paid yet just by the wording here. It's going to go into a liability. Now, some companies will split their liabilities out. They won't have them all sitting in accounts payable. They'll have a separate liability for certain expenses, and this one is going to be utilities payable. So it's not sitting right in accounts payable. Okay. You know, if you really wanted to get technical about it, they used to call it trade accounts payable, and that would mainly be used to buy your inventory. So your inventory purchases would run through that accounts payable, and then you would have other payable accounts for other things. You could have utilities payable, income taxes payable, you know, other short-term liabilities for covering those things. Paid cash dividends. Okay, dividends increase with a debit, so I'm going to debit dividends, 3,900. And I'm going to credit cash because we are paying the dividends, 3,900. Fantastic. Okay. So what we just did is we journalized entries. We journalized the transactions for the month. Now the next step is to post these transactions to the T accounts. Okay. If you click on this blue, I guess you could call it a hyperlink. We're not in the World Wide Web, but this blue link here, it'll reproduce the entry that you made up at the top. So you don't have to scroll back up and down. You have this here sitting on the side. So this is the first entry. And all we're really doing is we're putting it into the T account. So I got a $40,000 debit to cash, and we'll label that one September 1st. And then I got a $40,000 credit common stock, and we'll label that one September 1st. So it's just a matter of taking it from the journal and putting it into the ledger. Okay? And I think they want you to check as you go along. So you're really putting it into the same ledger, but it keeps giving you a new, right? Giving you a new set of T accounts, but it's really the same T accounts because you can see your first posting here, right? And then it adds another line. So you just have to go through the process of doing this. We're going to post a debit to office supplies of 400 and a debit to furniture of 1200. Okay, and make sure you label it with the date. This is September 4th. And then you're going to have a credit to accounts payable of 1,600. And then you move on to the next one. Okay. See, notice what I did previously is sitting in here. So we're just building on top of what we already did. On the 6th, we have a debit to cash of 1,500. And we have a credit to service revenue. Where did service revenue go? You got to be able to see it quickly. Okay, 1,500. So far, so good. You guys see what's happening, right? I don't really like the idea that it keeps making a new, you know, they could have just left it there and we could have posted all the transactions. And that's technically what we're doing, but I like this link so we don't have to scroll to the top. On September 7th, we have a debit to land. See, of 23,000, September 7th, and a credit to cash of, and notice I don't have to come down and use this next line here. I don't have any credits, I can use the top credit line, okay? It's really a way to accumulate all of the information that went to that account. So you don't really have to bring this down to the bottom here. Now we're going to do the September 10th entry. Debit to accounts receivable of 900 and a credit to service revenue of 900. Okay, don't forget to date it September 10th. September 10th. Okay. Now we're on September 14th. We have a debit to accounts payable of 1,200. See, again, I don't go down, I don't skip a line. I have a blank line at the very top on the debit side, so I can put it right there, September 14th. Okay, and a credit to cash of 1,200. Okay. Everybody okay? So far so good, okay. September 15th. We got salaries expense. Okay. And that's a debit to salaries expense and a credit to cash of 1,500. Okay, now I'm on September 17th. I got a debit to cash of 600. And a credit to accounts receivable of 600. Okay, where are we now? September 20th. I got a debit to accounts receivable of 500 and a credit to service revenue of 500. You see how the accounts are building, right? You see that? September 25th, I got a debit to cash of 25,000 or 2,500. I'm sorry. September 25th, and a credit to unearned revenue, and that's a liability. So that's an increase to the unearned revenue liability account of 2,500. Okay. September 28th, and slow me down if I'm going too fast. Okay. I have a debit to cash of 2,900. September 28th, and I have a credit to service revenue of 2,900. I don't think we have too many more. Let's see. September 29th, I have a debit to prepaid insurance of 1,800 and a credit to cash of 1,800. Oh, I must have. Okay, you see the mistake that we made? You guys see that? See, the brain gets lazy sometimes. I correctly credited cash, but I put a credit in for prepaid insurance. That's where that should have been a debit. Okay, so you want to be careful with that, especially on the tests, because it's a one-shot deal, right? So you probably don't want to go as fast as I'm going when you take your tests. Just, you got to be kind of meticulous about it. Okay. Fix that. And the test won't give you that, oh, you did it wrong, and give you, it's just going to let you keep whatever number you put in there. So you want to really eyeball it. Okay. Now, I'm on, I think this is the dividend one. No, this is the last salaries expense. So debit salaries expense, 1,500. Okay. After you do a few of them, sometimes the brain kind of wanders a little because you get into this groove, and that's when you can make a mistake. So you want to try to stay attentive with it, right? Attentive. Okay. Now, did I just? Yeah, I got it in there. Okay. Okay. Now I'm going to do rent expense. So I'm going to debit rent expense for $950. Rent expense is sitting right here, $950, September 30, and credit cash $950, September 30. I think we have one more after this, and it's going to be that dividend, I believe. Let's see. Oh, I think we have a couple more. Okay, utilities expense, debit $550. And credit cash, or accounts payable, I'm sorry, $550.
That's
Yeah, I made a mistake.
yeah.
Good catch, Titus.
It's not in accounts payable either.
Yeah, it's supposed to be utilities payable here, right? Good, you guys are watching. Okay. Delete that. Okay. Get it out of here. And that's supposed to be utilities expense. Right here, $550. Okay, and finally the dividend. So the dividend, right, is going to be a debit to dividends of 3,900 and a credit to cash of 3,900. Okay. So then it's just a matter of balancing the accounts, okay? So we'll start with the big one, cash. Cash has the most activity in it. And the way we do this is we need to get the difference between the total debits and the total credits. And we're going to put that difference on the side that has more, right? So if you have more debits than credits, then the difference is going to sit on the debit side. If you have more credits than debits, then the difference will sit on the credit side. Okay. So I think that I'll add up my cash debits. So 40,000. Okay. So the sum of my debits is 47,500 for cash. I'll put that in memory. So memory plus. And then we'll add up the credits. Okay, and then you kind of got to think in your head, was that less or more than what's in memory? This looks like it's less, so we're going to have more debits than credits. I can just hit the minus sign here and go memory recall. And the difference is 13,650. So you can take your little arrow from your calculator, drop it in there. Of course, it's not going to be negative, right? So we got to get rid of that negative sign. There. Okay, and then that's going to be labeled your balance. Okay. And we would do that for every account. See here, accounts payable, just two entries, right? A debit of 1,200 and a credit of 1,600. You can tell that the credit is more than the debit by 400. So the difference is 400. I'm going to put it on the credit side. That's going to be my balance. Okay. With revenue, it's all credit. So all you really have to do is add up all these credits. Okay. So we got 5,800, right? If I add them up. That'll be my balance. Okay. Accounts receivable, right? We got a 900 debit and a 500 debit and a 600 credit. So again, it looks like it's going to be more debit than credit. And that's really going to be 1,400 debit minus 600 credit. So what do we have? $800, right? Some of them only have one entry, so you just have to bring it down. So utilities payable is 550 credit, one entry. Salaries expense, not too bad, right? All debit, 3,000, right? 1,500 plus times 2 basically equals 3,000. Office supplies, $400 debit. Unearned revenue, 2,500 credit. Rent expense, one entry, right? 950 debit. Prepaid insurance. I think the rest of them are just like that. They only have one entry, so it's not a real headache. Just a matter of putting it in as the balance. You want to make sure you add and subtract correctly for the ones that have multiple things going on, multiple entries to their T account. So let's see if we got it right. I did it pretty quickly here. Oh, we got our math is okay. Okay. So I have the balances of all of my accounts. You guys see how I did that? Makes sense, yeah? Okay. So you don't have to have a number on the debit and credit side in the balance. It's really the difference between the total debits and the total credits, and you stick it on the side that has more, okay? And some of them naturally are going to lend themselves. Most of them naturally have what we call a normal balance. For an asset, the normal balance would be debit because assets increase with debits. So normally if you have an asset, you're going to have a debit balance. Payables, liabilities have normal credit balances. Okay, that's what they mean by the normal balance. Now we're going to make the trial balance. So making the trial balance is just a matter of taking the balance in each account and listing it in a listing of accounts as a debit or credit, whatever the balance is. Because all of these debits and credits have to equal, right? The total debits and total credits have to equate. So I think we got a little link here. We can pull that up. And we can have all of our accounts sitting here on the side while we prepare this trial balance. So we'll do the assets first, and I believe they're in this column. And we'll just go down the list. In fact, I'll put the names in: cash, accounts receivable, office supplies, prepaid insurance, and there's another one, furniture and land. Land. We might as well put those numbers in. So we'll go. The cash balance is $13,650. Accounts receivable is $800. Office supplies is $400. Prepaid insurance is $1,800, all debit. Furniture is $1,200, and land is $23,000. Okay.
Would
Then
the expenses be on there, even
Yeah,
debits?
the expenses are going to be as debits, but remember, expenses are in a different category than assets. So the way I like to put the trial balance together is I like to list all the assets first, then the liabilities, then the equity, then the revenue, then the expenses.
Okay.
Okay, so the expenses are probably going to be at the bottom, but they are going to have debit balance. You're correct about that, yeah. Now we're going to do the liabilities, so it's starting here in the second column. I'm going to go accounts payable. I got utilities payable. And be careful with that because I saw an expense there. There's a utilities expense. You don't want to accidentally click utilities expense thinking you clicked utilities payable and then get that wrong. Okay? So be real careful. Unearned revenue is a liability. And then we get to the equity items. So we got common stock. And let's see what else we got. We got dividends. Okay. And then we'll take care of that. That's that second column here. So my accounts payable has a $400 credit balance. So make sure you bring them over. If they're credits, bring them over as credits. Okay. That's an easy mistake to make. And you know you're supposed to bring them over, but sometimes you get on autopilot, like I said, and you think you brought it over to the correct side, and you end up okay. And note, dividends have a debit balance, right? So that's a pivot right there where you have to go from credit to debit when you're listing these things. So
Why is it debit again?
dividends increase with debits, right? So when we booked the dividend, we debited the dividend account and we credited cash to show the payment of the dividend,
Oh,
right? So it's sitting there with a debit. Then we got this last column. I think we can see all of them without having to scroll down. Yep. One revenue account, service revenue, and 3 expense accounts: salaries expense, rent expense, and utilities expense. Okay. So my service revenue has a credit of $5,800, and then my expenses will have debit balances. So $3,000 for salaries, $950 for rent, and $550 for utilities expense. Okay. And then this trial balance, it's a trial, right? It's a test to make sure we have equal debits and credits. So we have to add up the debit credit, add up the debit column and then add up the credit column. And if they're not in balance, whatever you do, don't hit check answer, because you need to go back and make sure, figure out why they're not, why the two columns are not balancing. clear that memory out. And I'll start with the debits. So I'm starting with the cash balance, 13,650, 800, 400, 1,800, 1,200, 23,000, 3,900, 3,950, and 550 for utilities expense. I get 49,250. Again, put your cursor there, and then you can click this backwards L-shaped arrow. And that'll drop it right into the box that you put your cursor in. Okay. Now we're going to come back around, and I'm going to add up the credit column. So starting with accounts payable of 400, utilities payable of 550, and we just go down the list. Okay. And let's see what we got. 49,250. That matches my total debit, so I feel pretty confident that I can click check answer. Let's see what we get. It says well done.